Hello everyone and welcome to today's Stocks and Crypto YouTube Charts video. I am the FOMO Charts. Today is Saturday, March 28, 2026. It's just before midnight on Saturday here in the USA in the evening, nighttime. Welcome everyone. This is a swing trading and investing YouTube Charts channel. This upcoming week, we have earnings releases coming out of McCormick, Nike, Bitfarms, Beyond Meat, Conagra, and more companies. USA economic data, we have quite a bit of data this coming week. Fed Chair Powell's speech, job openings, consumer confidence, non-farm employment change, retail sales, core retail sales, manufacturing, PMI and prices, unemployment claims, average hourly earnings, non-farm employment change, and unemployment rate. Recent news for stocks: the Iran versus Israel and USA conflict continues. USA announced a temporary ceasefire on certain objectives until April 6th, and there was an attempted negotiation which actually looks like it was denied by Iran for now. So the negotiations and conflict continues. Recession risk rising. Some financial institutions like Moody's and Goldman Sachs raised their estimate for recession risk up to 30% to 48.6% of recession within the next 12 months here in the USA. President Trump signed an executive order which allowed TSA workers, the airplane workers, airport workers to receive paychecks as early as March 30th. So TSA, the airport agents, hopefully they can get paid. David Sachs is stepping down as White House crypto AI czar after reaching his special 130-day limit for special government employees. The Clarity Act for crypto. Reportedly, there was bipartisan support agreed upon in principle for now. So verbal principle agreement for now. The New York Stock Exchange and securitized markets planning to develop tokenized securities markets. That's a rhyme. Allowing 24/7 trading of USA equities with on-chain settlement and stablecoin-based funding. I like this idea. I like tokenized securities because sometimes extended hour doesn't really work well. You can't have a stop loss. It's limit order only. You can't have OCO orders. So even though it's going to cause traders a lot more stress overnight, so over like 8 or 10 hours, 12 hours overnight, still though, just being able to have a stop loss and being able to have OCO targets, I think is nice. Also, with the on-chain settlement, it's faster. Get your funding back faster after trades are closed, and stablecoin as well. It's faster transfers. So I like this idea. The 20 millionth Bitcoin has been mined. Only 1 million Bitcoin are left for mining over the next 100 plus years. This is supposedly supposed to increase the scarcity of Bitcoin, but nobody really cares about that right now because the market's crashing, unfortunately. So sad. There's not that much good news, but we must continue on here looking at the charts. Google chart event, bearish head and shoulders price pattern started. The neckline was broken to the downside. The price is below Bollinger Band and linear regression lower channel. Silver ETF, the MACD bullish momentum is forming. The price is near a support level of $60 for now. Let's start off with stocks. I want to preface and begin this part of the video saying, yes, there's not much good happening in the market right now. If you're a bull, if you're long only, it's been pain for 2 months straight in terms of trading and setups. So there is definitely regime change. There's definitely catalysts in the past 60 days since about February to March. Was it predictable? Was it forecastable? I would say yes, because when the price starts to go sideways, If it doesn't bounce off of that 672 level on the S&P 500 ETF and keep going higher, then we have a problem. It's downtrending. So I'm not surprised it's downtrending and capitulating, because some people try to hold the dip, and then when it's failed, it just gets stopped out. For me, I have not traded indexes at all for months. So on a weekly chart, remember a few videos ago, even last week, warning about the head and shoulders on a weekly. That broke bearish, and we're hitting the third target on the downside. Let's put an anchored VWAP here since the tariff low so people get an idea. This blue line is the anchored VWAP from the tariff low spot. So it is getting to an interesting spot at value. It's drawing from the high, I guess, but it is in that zone of where possibly we could get a bounce. So the weekly pivot is around 618. The anchor VWAP was about 637. If I also put weekly Fibonacci low to high, the next 3-2 level is about 623. So this box right here is where I think we might get a tradable bounce. But in terms of investing, if we do go into recession, usually the downtrends, it lasts for quite a long time. So last time this happened in 2021 to bottom of 2023, took about 1 year. COVID was quick. That was 60 days of crash. 07 to bottom of 09, that took 2 years almost, 651 days. So it could take 1 to 2 years if it's really going to be a recession. 2000 was a lot worse. It took over 3 years. So just looking at that small subset of data, it could take 1 to 2 years to really bottom out. So the short-term catalysts like tariff rebound, that happened in about 2 months. COVID crash happened about 2 months. So if this war ends at some point when it started, let's see, March. So possibly next month, we might see a tradable bottom, just using that estimate. It is not all about the technicals. The daily chart is oversold. The 4 hours oversold, but we are downtrending in price. So trend is more important than technicals. I will need to see a double bottom or a support price hold multiple times. And this is going to apply to all indexes because they all look basically the same for now. So just as a long, I could technically long inverse ETFs. I could long energy. But for me, because of the volatility of the news right now, is I'm actually just waiting. I don't really have to do anything. Just wait. As an investor, it's okay to just pass. I don't have to swing at every pitch. That's a baseball reference. I could just wait as an investor. We just wait here in the market. Because I want to see something like this. I'm on QQQ now. Once I have the higher low, this reversal, so we're coming down and then we have a higher low. That's exactly where I want to re-enter into the market. We are not getting that right now. We're in capitulation, downtrend, price discovery, downtrending. This symmetrical triangle is 6%. It could keep, we hit the first target. The 12% target down here is 533. We lost that anchored VWAP. Nobody cares about that right now. Unfortunately, right? People are just taking their profit or protecting their positions. And the next 3-2 level, support level is 552. On the weekly pivot point, we can see that 552. So I need to see like some kind of large hammer or double bottom for longs to keep coming back. Dow Jones, very similar. Interesting, the 200 EMA got rejected. We got slammed in the price. Institutions, everybody just selling right now. And we lost that 3-2 level. The weekly chart, I don't even see a weekly green candle for the past month. So that's going to be the sign for me. For a tradable bottom, I need to see a hammer where If it keeps going red, 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 I'm not going to buy. I'm going to buy once, let's say, a green hammer, and maybe I'll play the Morningstar reversal, right? But it's not unusual. This is not unusual because at the top there, we were way out of that, or back at that time when the linear regression was rewinded, we were, for a week, we were at that top, and that was a warning. When we didn't bounce off of 488 to go higher, that's when I was hands off. So for me, I'm not an aggressive short, but I might be aggressive in passing in terms of just stopping the investing. That's what's happening right now in the market. IWM, very similar. We had that large double top. IWM surviving a little bit better. The pivot point for IWM is way down here at 226. Could take months to reach that spot. But I don't want to be too bearish, because if we look at 4 hour, 1 hour charts, it is starting to get oversold. So we could get a small tradable bounce for like a 9:30 a.m. bounce. But I'm talking about when will the market reverse and stop to become like a secular bull market again. It's going to take months for that to happen. So I'm looking at the market from two perspectives, trader versus investor. As a trader, I might play a bounce once I see a tradable bottom, like a double bottom, price support holding really well. As an investor, I don't even want to buy any of this right now because it's just downtrending so hard. I want to see a bottom out. I don't like catching the left side of the downtrend. I want to catch the consolidation to the bottom, or even better, catch the reversal and just enter there. Look at a little bit of gold. I like how gold hit this pivot point, holding for now above $400. See if it can bounce up to 430. What I was saying earlier, silver, there seems to be a very short-term ETF double bottom on the price. So price support above $60. I do like how I'm seeing this double MACD setup with the low stochastic. It's still downtrending, however. Shorts can really, if it bounces, it could be a small bounce, and then shorts can continue their selling. So just watch out for that, but it showed up on my scanner. Oil still uptrending right now. We had that low stochastic in the price and bouncing off that 113 level. Now, yes, I was warning last week, but I'm not seeing the extreme double top or head and shoulders. Once that happens, then we'll know it's over. But it's still continuing right now because of the global war. Also, on a 4 hour, there was this little bit of momentum setup. People like that. But for me, the breakout needs to not come below 122. Natural gas for now, there is a little bit of potential higher low correlation with oil here because low stochastic. As long as it doesn't crash below 1160, we're actually okay here. UGA gasoline fund, just want to caution, this is pretty low volume, but it did have this double bottom. See if it could break above 105 or not. Tech stocks, XOK, we lost the support, unfortunately, but it's really obvious that it's been downtrending, and AI tech stocks just selling off. For now, price needed a reset. If we're honest, I'm all out of tech stocks. I have no conflict of interest at all with tech stocks right now because I sold out of that months ago, mostly last year, because I did not like consolidation. Consolidation to the side for a very prolonged period of time for 3 to 6 months is bad. That is bad. Once we get rejected out of there, 10% to downside. We actually hit that target. 128 could be the next support level. Put some pivots up. That's the S3 pivot point. I have my Fibonacci up right now. Put up an anchored VWAP from the bottom of tariff low. We lost that anchored VWAP. So if it capitulates further, 121 could be next support level. It really depends on institutions and hedge funds. When will they stop selling, and when are they going to buy again? That's the big question. Remains to be seen. XLF, perfect example of downtrend capitulation. This is not an uptrend. It's downtrending. It's pretty deep, however, since our tariff low. We lost the 618 level. So like I was saying, for almost every chart right now that's downtrending, I need to see double bottom. I need to see price hold and not crash. It needs to hold and then begin to reverse. Then I might enter into those trades. Only interesting thing that I saw for now, tech stock Google had that large head and shoulders. Yes, it was above EMAs. But if I rewind that, it's quite high if we were just looking at price only. And for that measurement, could have been about 16%. If it's going to crash more, 16% would take us down to 250. We have the next earning as well in about a month from now, end of April. So that's maybe the catalyst for a tradable bounce. For now, however, an easy way to think of this is I like to draw multiple trend lines down here. And that X really does seem to mark the spot in that zone. If we get to 250, 240 range, I might buy some Google just because there's double support there. Also with trend lines, if I draw this particular trend line, we got rejected down there. So again, I'm not long yet, but Google's approaching its 200 EMA at 270. We're gonna see if it's gonna bounce there or not. It's really up to the institutions. Let's go to crypto now, and we'll end this video after about 10 minutes. So crypto, total market cap, TOTAL. We are still in the death cross on the daily chart, downtrending, lower low, lower high, lower low, lower high. The only good thing I can say is we are barely holding on to a trend line support down there. Barely holding on. So if there's any surprise bullish catalyst in the next 1 or 2 weeks, we can actually break bull 10%, because if everybody is extremely bearish, and if everybody is thinking we're going to have recession, inflation price-based crash into a recession, there's still a chance, I believe, for a small tradable short squeeze. But like I said, I don't want to get too aggressive here because it's still death cross technically. The best thing to do for crypto is wait for a golden cross on Bitcoin and total. But I'm an aggressive swing trader, so I'm already in here. I just need to see that I need to hold above 2.1, 2.2, and hold above 2.25 trillion. Market cap. Bitstamp. Okay, so here I was drawing and explaining to somebody, one of my colleagues. Let's go to weekly chart. I'm on a logarithmic scale so we could see the price a little bit easier. This is Bitcoin USD on a logarithmic scale Bitstamp chart going all the way back to 2011 price. Now, when we have these big market tops like the all-time highs, Bitcoin typically needed to drop negative 80% to reach the market bottom. Negative 80% to reach the market bottom, negative 80%. So if that's going to be true for this particular market cycle that we're in right now, that would mean the top of Bitcoin at 125 would need to crash all the way down to $24,000 Bitcoin to $23,000 Bitcoin. I'm going to say $23,000 Bitcoin to mark the bottom of Bitcoin. And how long does it typically take? This is 13 years of data. This only happened 3 to 4 times in history. It typically takes, this one was 650 days. So we'll say that one was about 2 years. The first crash going from 2013. The second crash happened in about over a year. The third crash, top to bottom, took about maybe like 1.5 years. So it could take 1 to 1.5 to 2 years. So let's just say 1.5 years from the top. Estimating that of October 2025 as the top, that 1.5 years would be somewhere around next January, approximately. So maybe Q1 2027, we might see the bottom of Bitcoin. What I was saying, so that's looking at as investors. So just be careful of that. Anyone out there who thinks we might be at the bottom of crypto, it actually might not be. Historically, 75% that it could go all the way down to $23,000 Bitcoin over time. The only thing that could change that is if we do have this double bottom. So now I'm putting on my trader mindset is, however, if I see a price pattern here that we get a double bottom or upside down head and shoulders over the next 6 months, or it actually holds the 60,000 level and we have a nice big hammer into a morning star, maybe then I might change my mind. But for now, I just need to hold my lines in the sand. $60,000 Bitcoin, if we hold above that, maybe there's a good chance we have a tradable bounce. So with that long-term view in mind, let's switch to, let's say, the Binance chart. The last low most recently was December 2022. That was about $16,000 Bitcoin. Go to our high of $126,000 Bitcoin. The 618 of Bitcoin is $56,000. Then 786 is 40,000. Then 0.88 is 28. So we could see if we really penetrate that to the downside, this could be that capitulation crash that could happen. Because we do have a death cross in the market. So for me, I'm just playing an aggressive swing trade right now. But if I wanted to get the best value of Bitcoin, I believe I have to just wait. Wait for macroeconomic factors, the fundamentals, global, to change. The Iran war would need to stop. Inflation would need to actually show signs of reducing. Prices need to go down. The CPI, PPI data, PCE data, inflation for stock data, inflation needs to go down. We need to get rate cuts. For example, we need bullish crypto legislation for America. I'm talking about fundamentals now. So that's what I'm waiting for on the fundamental news side. What I'm waiting for on the price side is it just needs to stop dropping. And it could take a while. Like I said, it could take 1 more year for that to stop dropping. So we're obviously inside of the crypto and Bitcoin and altcoin winter season, so to speak. It's bearish right now. So as a long, patience is extremely important because I don't want to take too many losses down here. I am taking a trade right now, but I don't want to just keep losing 50 times because then that's not smart. I'll have little small tactical trades. I just noticed right now there is this head and shoulders on the price, that slanted neckline. We lost 6% to downside would take us to about 64,000. So we just need to stay above that 60,000, 65,000 range. It is very subtle, but Bitcoin is starting to tighten and coil up, but that has rejected down before. So I'm a little more bearish right now. Long term, I'm still bullish for 5, 10, 15, 20, 50 years. But in terms of what's going to happen next week, it's still in a technical downtrend, unfortunately. And that's part of the game. That's part of the system of crypto and stock trading is it does not go up all the time. It comes down. And when it comes down, it usually lasts for about a year in a serious downtrend. Ethereum USD still in this downtrend. The death cross is still underway. Lower low, lower high, lower low, lower high. Hopefully this is not our lower high and we're not going to capitulation crash. We're pretty deep here in this penetration of the price. Let's just rewind for a minute here. Turn off the EMAs. Let's bring that Fibonacci all the way back to the tariff crash. If we go all the way back to 2019 crash, this is 618 Ethereum. If we bring it to COVID crash, we're still in 618 zone. If we bring it to the 2023 inflation crash, we're in the 786, 618 zone. So we're still in a decent zone, but zooming out for this far, actually noticing this type of wedge pattern, almost an ascending triangle, but I don't want to call it an ascending triangle because that could give people a little false hope that it's always going to be bullish. So it's turning into a wedge. So what Ethereum needs to do is hold above 1800 for sure. We cannot go below 1500. Once we lose this support to the downside, then there's going to be some serious capitulation. But I like what do I like and what I don't like? I don't like we're in a death cross, but I do like it's closer to the support side down here versus being at the highest resistance point. I like being down here. It's just a matter of, will a capitulation crash and get some kind of signal like a hammer, Morningstar, V-shaped recovery, and then people actually say, oops, we can revert to the mean if anything good happens in the market. All right, let's do the last two, and then that'll be the end of the video. Let's do XRP on something like Bitstamp. Bitstamp, we need a lot of price history. Unfortunately, XRP, not the hero of crypto that we always wanted it to be, but that's the landscape of crypto. Everything can change. So from bottom of COVID 2020 to the top of 2025 on XRP price, we're in the 618 zone for now. If I bring a trend line and try to find longer term trend line support, it's still floating in the middle here. So if XRP comes down to 66 cents or 52 cents, 50 cents, that's a deep area of value. And so we can see when price starts downtrending, at some point there's the big capitulation crash. I need to see price go sideways, get that double bottom, start uptrending. Is it happening now? I'm sorry, but the charts are telling me at this point in time, it is not happening now. We could get a little small bounce, but the big reversal bounce on crypto is not happening right now. Let's look at Solana, last one. Use Binance chart, get some more price data. This is better. So when Solana launched in the pandemic 2020, let's go to top here. Actually 272 was that top. Not looking so good right now because we had the double top. If we measure that double top, it could crash way down here, 80, 90%, back down to like $20 Solana. We would all love that because that's so cheap. But I don't want to really see that happen to this coin, but it's below that support trend line. We were supposed to bounce off of 175, but that did not happen. So Solana, meme coins in some trouble right now. Pivots, it's death crossed. So again, I need to see, how did I know how to come here into $20 Solana back in 23? Because Bitcoin bottomed. We had that negative 80% on Bitcoin. Solana went negative 95% off. That's what I'm talking about. We're buying crypto at negative 80, negative 90, negative 90 for 95% discount. That's the spot to buy crypto and stocks. Is today the time for me to all in? No. Is today the time for me to keep charting? Yes, and prepare for the future. So I'm looking for not a downtrend as a long bull. I'm looking for sideways price action, and then eventually at some point in time, it will happen again. It's just a matter of when this crash is over, we get an actual reversal signal. All right, everybody, thank you so much for watching. Remember, patience is key. Emotional control is key. Risk management is key. And executing strategies only and not getting phased around emotionally by news and the media and social media. Thank you everyone for watching. I hope you have a nice weekend and month, and I will see you in the next video.